Hey traders, it's Greg from Trade 90X, and I'm excited to bring you another one of our Trade 90X Get Trade Fit 90 Days education series number 7, How Markets Work. This is every lesson's important, but really it's so important. If you don't understand how markets work, then it's very difficult to have success. Like anything in any business or industry, you have to learn the nuances, how things work. So before we get started, again, in all my education things, if you don't understand anything, you hit us up at our email at hello@trade90x.com. So let's get started. So before I get into any video, I just have some pre-information on Trade 90X. Number one, all information we provide is for educational purposes only. Please consult your financial advisor or accountant before making any financial decisions. All lessons that Trade 90X provides are to help traders prepare how markets work and educate how to trade real money with a statistical edge. Trade 90X, we always trade with a statistical edge. And what does that mean? That means that we've back tested our numbers, our process over time like a casino. We know over the long term our plan wins. We understand the right information, how to find it, how to execute it, how to master risk and be accountable. Our process is mechanical, systematic, repeatable, and replicable. Okay. You must always understand what type of trader you are based on time, resources, and personality. And traders, we always feel, must have support to have success, meaning that we provide support through our Trade 90X Mastermind group, where all traders alike are helping with one goal, be successful. So let's get to the lesson. And I like to keep these educations series short and sweet. First thing I always talk about with how markets work is, number one, you need to understand how we break down the charts. Okay, we look at the main trend. Let me get to the chart here. Let me open it up, and I will make it into 3. Okay, cool. Let me just put the bar chart. So one of the things that we do, and this is something that, again, it just takes practice, but it makes things, it cuts your learning curve so quickly. Number one, the main trend. When I say main trend, that means what is the monthly and weekly doing? Okay, we're looking at the S&P, which controls 75% of the market. What I'm looking for at Trade 90X, what we look for at any symbol we trade, again, this is how the markets work. We want to see the path of least resistance. We want to see either obvious bullish price action, higher highs and higher lows, okay, or we want to see bearish price action, lower highs, lower lows that are obvious. You can see right here the bulls still have control in the monthly and weekly. Yes, there's a pullback, but the bottom line is we see that the bulls have control. When we see that, we can say that the main trend is bullish. Now, what do we do in that case? We go anywhere from a 15-minute to a daily, okay? And this is for a different lesson, but I'm just going to put in a potential high area of support that I can sink into the monthly, weekly, and daily. So what basically we were doing here is just eyeballing it. If this was an area of high probability, a zone, again, we always say high probability area to trade off of, because there's no guarantee with any kind of people like to throw their name, support, resistance. Listen, there is no guarantee when price comes, but what we look for is when the monthly and weekly main trend is up, we will look for a pullback to a high probability zone, and then we'll watch to see how price reacts. And if it gives us the reaction, again, that's for another video. This video is about how it works. But if we get the reaction like we did here, where the sellers were trying to sell and got rejected at a key area and in the bigger time frames, then we're going to look to then go long in a trade and re-enter the main trend. Now, let me see. I think BABA would be a good one. So here's an example of a bearish situation. So basically what we're looking at is we're looking for things that are obvious. Now, I think you can agree that right here, the market is to the monthly and weekly is obvious to the bearish side. Okay. Now remember, if something is not obvious, do not trade it. Find a symbol that can be traded. Okay. Now, again, one of the things that we always look at is we'll look at areas, again, and it's not for this lesson, but I'm just putting in something like this here. I'll sync it, and basically what I'm looking for is some kind of area, a zone right in here, if and see what the reaction is. Right now, we can see that the bulls still have control in the intermediary trend, so there's no short trade to follow the main trend. Okay, now once we see the main trend start turning back to bullish, then our bias will change. But again, we use that monthly and weekly to really help us. Does that mean that again, you'll learn this later in later lessons, does that mean there aren't some short-term trades here for the bullish side? There are, but again, that's a little bit more advanced, and that's for a different one. Today, we're just talking about how markets work. So one of the first things, like I said, you have to master is, what is the main trend? And then if the main trend is bullish, we're looking for pullbacks to areas of high probability, if you want to call them, we'll call them support for now, to trade off of. If the monthly and weekly is obvious to the bearish side, then we're going to look at areas potentially that were high probability zones of resistance to trade back with the obvious main trend. Okay, so that's how we look at main trend. Let me go back to the SPY. So now that you've learned one of the parts, now let's get into the rest of it, how we look at things. Now, basically, there are 4 phases of the market, and you'll see these repeat themselves over and over and over. I don't care if you have a 1-minute chart or a monthly chart, and this is what it looks like. It looks like you have accumulation, markup, distribution, markdown, and then it starts all over again. What the accumulation phase is, you'll see heavy volume, but you'll see a sideways base. Usually it started as a downtrend, then it starts basing, and what this is basically telling us is that the buyers, the sellers have now hit their objective, and now sellers are becoming buyers, and they're now accumulating. Once price breaks out of the accumulation phase, we now call this the markup phase. That means it's bullish. And what you'll have in here is you'll have now when I say accumulation or distribution, let's just preface something. One of the things you must learn is the bigger institutions, the banks, the hedge funds, they control the markets. The retail traders do not control markets. So what our goal is to use the right information, and that's what we do at Trade90X. What information we need, how do we find it, how do we use it, and how do we execute it? And this is, again, we showed you first, we started with the main trend versus intermediary trend. Okay, now we look at this price action or order flow, whatever you want to call it. You'll learn both as we move into further lessons. But this accumulation, usually it would be a downtrend. All of a sudden it starts basing, sellers now become buyers. Then once the institutions now have enough, they will start, the stock will start, symbol will move up. And then what you'll start having here is you'll start getting people who are speculators trying to short. But again, if the institutions, the people, the smart money, are, again, they're in a long position. They're not in it for short term. They need high liquidity. They need price to move in order to make money. So what you'll have is you'll see these kind of momentum into smaller consolidations. These are, again, wrong-sided traders trying to sell when we're in an up market. And then once their shares have been absorbed, you'll see price move up. Okay. Then once the smart money, institutions, hedge funds have hit their objectives, they then switch from buying to selling. And then you have retail traders in here, and they're absorbing the shares. And then once they've absorbed enough, they'll now become short sellers. Okay. And then this process starts over. In the markdown phase, you'll have speculators that are trying to buy, but if the smart money is short selling, then they'll absorb that and then bring it down until we start this whole process over again. So this is what it looks like. here. So here we have the accumulation phase right here. This is AMD, and then once the smart money has accumulated, price will start moving up. That means that there's more buying pressure than sell orders or sell pressure. Okay. Next, you'll have this markup phase where price is making higher highs and higher lows. And as I mentioned, you'll see when you see pullbacks, these are speculators or wrong-sided traders trying to short. And when they're wrong, again, you'll see this higher high, higher low price action. And then as mentioned, distribution, this is after a long uptrend, price will move into this consolidation. And then once we see price break down, that confirms that people have now gone from selling, from buying now to short selling. And then you have this, markdown phase right here. Now, one of the things I also like to use is I like to use odds enhancers, trend lines, and the 50 and 200 moving average. Let's go to the chart and let me show you. So here's the SPY. So scrunch the chart up so you can see it. So you can see this sideways action happen for quite a long time right here. And then we had the financial crisis. And then you can see right here, you have your tops, you have equal bottoms. That's how we know it's accumulation. And then once we do a trend line, remember, trend lines are based on, once you have 2-3 points, it becomes official. The more points, the stronger the trend line. And we can see just using a trend line right here, if you wanted to, again, be a little bit more of a speculator and get aggressive, you could have used the support of the trend line to actually get in early. Now, more conservative traders would probably have waited till price comes and breaks out of this accumulation, and then we start in the markup phase. And what's amazing is if you see from, right around here, once we broke out, we've been in that markup phase, and now we're already in 2021. We did have this, area with a pandemic but again, look at, we never really broke. We broke, but it really, and I'll show you when we add the here. So there we go. So now I have a 50 right here on top, and I've got the, let's make this a different color. So we're black. So we got the light blue 50 and then the 200. And then you can see, remember what I said right here? I said down here, when the 50 crossed the 200, it basically gave you an aggressive signal to enter early. And I'm sure there are a lot of people, again, who use the moving averages. And you can see, look at this. Even on this pullback, the 50 never even came close to dropping below the 200. And even in this pandemic area, the 200 still was sloping up, and the 50. So using the 50, 200 with the trend lines and being able to identify the 4 phases. So right now we're in accumulation, markup. And again, we have not had, this, again, where this would have been an effective, let me just show you, an effective distribution, and then we move to markdown. If this would have here started doing this, but making lower highs and lower lows, but it did not. And the 50 never crossed between the 200. And really, this did come below, but then it shot right back above the trend line. So these are the things that you learn over time as you really get more into your trading career. But you need to understand the main trend versus intermediate concept, and you need to understand the accumulation, markup, distribution, and markdown phase. So right now, that's that. Let's go to BABA again, because that was a nice downtrend. Okay. So let's use this right here. All right, so we have a trend line here. Now, this is a weekly chart, okay? But let's just look here. We've got a pretty strong trend line going here. Now, there was some news that came out. That's why this thing, changed personality so quick. But right now, you can see right here, Here was your accumulation phase. Here was your markup phase. It pulled back, but look, the 50 never broke the 200. We never really broke the trend line. So all this basically was just a pullback. Okay, it was just a pullback within the trend. And again, this is where you need to understand. That's why I a lot of times will have traders start with trend lines, and again, you can use them always, but they're a great visual tool where you might not see it. So you can see right here, we continued in the markup phase. Okay, now once we broke really the trend line, and what's nice about the trend lines is the trend lines a lot of times will give you a little bit earlier signal, many times in the 50 and 200. So that's why I like to use them together. But you can see right here, when the 50 broke, right here, the 200, the trend line had already, broken. So at this point right here, this is where we really started that markup phase. This was your, and again, it's not always going to be as clean as this or up top, but this is definitely your consolidation phase. And then it broke down. And then once we really broke the trend line, and then once the 50 got below the 200, that really, confirmed that markup phase. And now you have this trend line in place. So really, until we really break back above this trend line, and then the 50 starts turning back up, yes, we could get some short-term run, but until that really confirms, you just, it's the probabilities. Again, we always want to trade with probabilities. That's why, I'm showing this. So you need to understand. So let's go back. So again, and let's wrap this up. And again, if you have any questions, you'll hit us up at hello@trade90x.com. So again, you really need to understand, again, the main trend, intermediary trend, which we showed you. You need to understand the 4 phases. Again, this will happen in any time frame: accumulation, markup, distribution, markdown. We showed the SPY. It's presently went from accumulation to the markup phase. Then we showed BABA. It's moved from it went from the accumulation markup now to distribution, and it's presently in the markdown phase as we speak. So once you master the main trend, intermediate trend, and again, what it does is it makes things easier. You come in and, I always say you're always much more relaxed. Okay, so if we take this off right here, when we come in, we look at BABA again, and you know what? We're relaxed. We immediately say to ourselves, okay, the main trend in the monthly and weekly is down. Okay, let's go look at the price action to see where we're at. So we can see we went from accumulation to markup. Now it's consolidated, and we're now in a markdown phase. So when you understand the main trend versus intermediary trend, and then you understand the 4 phases: accumulation, markup, distribution, markdown, you're ahead of 99% of the traders, because when you come in every day to do your analysis, regardless of the time frame, you know exactly what you're looking for, and you know what phase you're in. You know what the main trend versus the intermediary trend is, so you know what's going on in the bigger picture. You know what phase you're in. So when you understand that, then it gives you a clearer picture on how to trade with high probability. So, okay, we've talked enough. Again, if there's something you don't understand after watching the video a few times, hit us up at hello@trade90x.com, and be more than happy to answer your questions. Trade safe.